LiteFinance, the world of financial freedom.
Hello, it's most probably Tuesday already in Vietnam. Nevertheless, the calendar is full this week and it's not too late to discuss what will happen during this trading week. So let's start the market forecast with the macro calendar summary. Today we already received the data about the flash PMIs from Germany and UK, which for Germany surprisingly were much better than the previous readings and forecasts. As for the UK, the readings disappointed a little, hovering slightly below the forecast and the previous month data. On Tuesday we will have inflation data from Australia, German IFO index and Conference Board consumer confidence from the US. On Wednesday, Australia has holidays, but the main focus on that day will be on Bank of Canada and FOMC, which will publish their rate decisions and monetary policy statements, which I think will be the key since there is no clear premises for the rate hikes right now from either side. Later on Wednesday, New Zealand will publish also their inflation data. On Thursday, core durable goods orders from US, along with initial jobless claims, pending home sales, and most importantly, preliminary GDP for the fourth quarter of 2021. On Friday, German GDP and core PCE price index from the US. So in a nutshell, as for the USD, I think the currency will strengthen overall this year, at least until November. I talked about that in other videos on LiteFinance Global channel. The case is that it is the last moment for President Biden and the ruling party to introduce some unpopular and maybe economy-hurting legislation. In the second half of the year, there is something called midterm elections where most often, or I should say almost every time, the opposition party wins those elections, and that causes a strong political impasse, which will prevent them from passing any controversial new legislation. This is why we see this meltdown, we can say, and have many losses on the stocks. But this will be just a correction, and you must just survive this and even buy more of the stocks into your portfolio, since there will be many opportunities. Overall, this situation will cause the dollar to rise in value. As for this week, the reason for the dollar strength might be a hawkish statement from the FOMC, although Powell cooled down the narrative a bit lately, but mainstream media are fueling people's minds with fear of rate hikes to the point that markets really fear interest rates decision, and any hawkish comments can cause a significant dollar price increase. Currencies that might be the weakest against the US dollar might be the Aussie, Kiwi and Japanese yen, maybe even British pound. As for the first two, it might be due to a very strict and harsh approach to pandemic restrictions. Those economies are suffering very much because of that. It might be that for some time the correlation between this and the price of a currency can occur. As for the technical standpoint, the things that I could refer to right now are Euro Pound and the harmonic pattern, which can potentially set out targets at 61.8 FIBO or 50 levels, which would mean that it is a good opportunity to look for pullbacks and enter on the long side of the market. And as well gold, which can again remain correlated to dollar when it gets stronger, which would mean that we could wait for the price to reach levels somewhere around the 78.6 or even 88.6 FIBO and then enter in shorts. Okay, I guess that would be all from my side. Thank you for watching and I'll see you next time. Take care, bye.